Okay, awesome. Thanks so much, David and Anka, for having me on. These events are always great, and so I do appreciate the opportunity. I know that you guys are have probably an education-packed week leading into the Thanksgiving holiday here in the U.S., and so I do am thankful for that and being able to talk to you. I know you guys are learning a lot. I appreciate the nice comments there from Eddie, one of our good students. And again, my name is Silas Peters from Trades Trending. And just do me a quick, I want to do one last just AV check, make sure I'm not talking into a black hole. If you can just let me know. You guys can see the screen here. And let's see, let me just get a little pin out. So I'm going to do a little smiley face. Can you guys see that creepy little smiley face there? Okay, so audio is good, visuals are good. Let's go ahead and get rolling. So I'm excited to be sharing this unique strategy with you today. It's what I call my 15-minute trading blueprint. I've been using this for nearly the last 20 years or so. And why am I still using it? Why am I still talking about it today? Because it still continues to crush it. But the best thing about it is its simplicity. This is a truly a mechanical, stress-free, emotion-free trading method that can be applied literally on any market or time frame. So let's get right to it. Now, we must take a moment here to read the risk disclaimer as required by our friends from the regulatory governing bodies. Past performance is not necessarily indicative of future results or is substantial risk of loss associated with trading. Only risk capital should be used to trade. So bottom line is trading is risky. You can lose money. Always do your own due diligence and make sure you're trading with capital that you can afford to lose. Now, what I like to do is ask the audience or the crowd here is, what do you trade? I like to get an idea of what everybody's trading. Do you trade, is it stocks? Is it options? Are you trading futures, Forex, maybe even cryptocurrency? Cryptos, of course, the hot topic again. So I trade all these actively: stocks, options, futures, not so much the Forex and the foreign exchange market, more so currencies on the CME futures, but I do trade some Forex there occasionally. But the reason I ask is because it does not matter which of these asset classes or markets you trade, because ultimately what we're going to be doing is trading price action. So we got futures, FX, options, weekly options, stocks and futures, not trading yet. And so the good news that I'm going to share with you today is this method is highly accurate, works in all markets, all time frames, 99% mechanical, and it's perfect for small accounts. And most importantly, again, is it's simple. I've used this strategy with a $2,000 account, $20,000 accounts, even $100,000 plus accounts. And I've used it in every market situation, from the '08 financial crisis to roaring bull markets, traded through debt crises, government shutdowns, presidential elections, flash crashes, more, you name it, from scalping and intraday trading to swing trading for a few days and position trading for weeks and or months. Now, again, you can do this with small or large accounts, and it can take as little as 15 minutes a week if you wish. Now, before we dive into all this, I'm going to introduce myself, who I am, maybe why you should listen to me. Other than that, I'm a pretty simple guy, a family man who thoroughly enjoys being a two-girl dad. I have a strong passion for the markets, golf, cooking, outdoors, Alabama football. But this is where it all started, the great city of Chicago. It's here where I cut my teeth in the commodity markets right out of college, working at the Chicago Board of Trade. Very quickly, I found myself working at Asia, European, early New York session trade desk, trading across the CBOT, MERC, NIBOT, NYMEX, various London and Asia exchanges, trading for our hedge fund, banks, commodity trading advisors, trading and handling some enormous size. 300 lot bond orders, 400 lot big S&P orders, 100 lot gold option orders, 250 lot Japanese government bond. And it was such an eye-opening experience to see how the biggest traders, market makers, and funds were trading and making decisions. And so I did this for a while, soaking up everything I could, any and everything market related, acquiring multiple futures and securities licenses. I was a sponge. Now, by then, my college sweetheart, and now my wife of nearly 20 years, talked me into coming home to settle down and start a family. So we headed back down south, and I immersed myself into the quieter side of finance, helping manage equity and fixed income portfolios in this glass building right here. Then went on and did some investment consulting for a private $2.5 billion family office. But during this journey, I managed to stay in the market, specifically the commodity markets, running and owning some brokerage units. And then I finally started my publishing brand in 2016. And it is here where I found my real callings, here where I teach students across the globe different ways they can generate the skills necessary to trade, manage portfolios, and turn their trading around in the right direction. Today, I want to help you do this too. But I want to quickly go back to the journey. The journey was not always easy. There was a learning curve, several obstacles on the path to where I am today. First step, learning. School cannot teach real life experience in the markets. I made money in the beginning, a substantial amount of money, but was I lucky? No, but ignorance and greed cost me my profits. I blew up an account, then another in what I call revenge trading. I'm sure a lot of you can attest to that. And those were all extremely humbling experiences. I almost gave up. I almost quit. Nothing seemed to work. I always seemed to be on the wrong side. But guess what got me back in the game? Now, remember, I was in a dark place, but I went back to the very first trading setup I learned almost 20 years ago. And guess what? I got back on track. I started banking wins again. I'd gone off the reservation looking for that elusive holy grail, but my journey ultimately led me back to where I had first started. So I went back to my roots, worked my repeatable process, and found overall consistency. Now, let me ask you this. Who here is or has been a victim of paralysis analysis? I'm raising my hand. I've been a victim. I've been there, done that, got the t-shirt. And per Wikipedia, it's a state of overanalyzing or overthinking situations so the decision or action is never taken. It affect paralyzing the outcome. So how many in here have done all the research and analysis they thought they could possibly do? They've crossed the T's, dotted the I's. They got the finger on the mouse, ready to pull the trigger. And then what happens? What happens? Some line crossed this line, or somebody on Bloomberg or CNBC said you should be buying instead of selling. And then what happens? You freeze, right? You freeze, and you ultimately miss out on the opportunity. Well, we know that trading is not easy, but it can be simple. And what I'm going to share with you today can be self-liberating. And so my agenda and promise to you is this, that we're going to learn a simple mechanical setup together that is repeatable regardless of the market or time frame. Now, I'm going to paint a quick picture here. We know that no market goes straight up forever or straight down. They move in waves over certain time frames, and trillions of dollars have been made by smart traders who recognize these trends. And at the same time, billions and trillions of dollars have been lost by those who think they knew what they were looking at and then got it wrong. So right now, I'm going to show you how we can get on the right side, because I think the most powerful thing that can be done is show you proof. As they say, proof is in the pudding. So let's learn about this exciting strategy together right now. What we're going to talk about is I'm going to show you a very high probability reversal pattern that looks like this. Now, these are, this is a 10% move, 8% move, 12% moves. It may not sound sexy, when you turn into CNBC or get your penny stock newsletter about 800% gains and 1500% gains and all that good stuff. But what these moves mean here is, $1,100 on 100 shares, $600 on 100 shares, $2,000 on 5 option contracts. And so, you get the point. Again, here, I'm going to teach you this high probability reversal pattern. 3.5%, 6%, 9%. That equates to $400, $800, $900 on 100 shares. These wins start to add up. Again, Lockheed Martin. Can you sell bear calls or buy puts? Can you buy calls or sell bull puts? Can you buy the stock, sell the stock? The answer is yes, yes, and yes. And then here's the 30-minute chart of gold futures. I mean, this is an $800 per contract move, followed by a $450 per contract move. 5-minute chart of the S&P. You've got plus 3 points, 8 points, 6 points, 10 points, over $1,300 a contract in a single session. So, you're probably seeing the potential. 30-year bonds on a 610 tick chart for those that like to scalp. $218 in a single session, one contract. Who would be happy with $218 a day, or $500 a day, or $1,000, even $50 a day? This pattern is responsible for identifying these moves before they happen and let you know when to get out. So as I said earlier, we know that trading is not easy. Not easy at all, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it, tried all kinds of stuff. Indicators, red light, green light systems, alert services, robots, and most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, fancy blinking gizmos and indicators, and started focusing on pure price action led me to seeing one simple pattern over and over and over. And guess what? That is when it clicked. It all started clicking. So if you are here as a new trader or a struggling trader or even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. And I'm telling you right here, right now, that this is a simple mechanical setup that anyone can learn, and you will keep this in your trading arsenal for years to come. And then the end of today's workshop, I'm going to make you an offer you can't refuse. How you can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. Price action pattern we'll be discussing today is, drumroll please, the 1, 2, 3 pattern. Who here has heard of the 1, 2, 3 pattern? Let me see the chat, either yes or no. Probably a lot of you, some no's, but this is one of the most fundamental technical patterns in the textbooks. We're talking technical analysis 101, but highly overlooked by most traders. Now, let's talk about the setup. Let's talk about the setup here. This setup is price action based. And guess what? Price action is king. And speaking of king, did you know this? Did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does tons of research. They look at maps, population counts, traffic patterns, competitive analysis, on and on and on until they find the perfect location for a new store. Burger King approaches it differently. They wait to see where McDonald's opens up a store. They open one up across the street or down this block. They get the same result with a lot less time and effort. So when we relate this to trading, we can let all of the Wall Street traders and institutions do all the research on which stocks to buy or sell. But all we have to do is look at the price, which takes into account all of their fancy processes. Basically, we're the Burger King to Wall Street's McDonald's. So the setup again is this. Again, it's price action based. It's when the pattern is comprised of a low, a higher high, and a higher low, and a break of that higher high, in the case that we're going long, inverse if short, anticipates a change in trend from up to down on a break below the 2 or B point, anticipates a change in trend from down to up on a break above the 2 or B point. The strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can be found within a trading range. And I will say that it works extremely well when this pattern sets up at significant areas of support and resistance, or the supply and demand levels, head and shoulder tops and bottoms, double tops, bottoms, and more. So let's take a look at the basic mechanics, okay? Now, what we're going to do here is start with identifying 1, 2, 3 bottoms. We use 1, 2, 3 bottoms when we are bullish or looking to go long, okay? So that it means we are looking for that market, that stock, whatever it is, to go higher. So we're looking to buy the stock, buy call options, expecting it to go higher. So as the market presses down, and finds its lower low and stops printing lower lows, that gives us our number 1 point. And as the market retraces higher and pulls back, that gives us our number 2. As the market trades lower and stops printing these higher lows and retraces up, that gives us our number 3. Okay. So with a 1, 2, 3 bottom, we are looking to get long on breaks or closes above the number 2. Now, the 1, 2, 3 top pattern is the exact same, but only flipped upside down. 1, 2, 3 tops are when we are looking to short or sell that market, expecting it to go lower bearish. Okay. And so with a 1, 2, 3 top here, it's just the inverse. Price is going higher. We find that highest high and pull back. That gives us our number 1. As the market retraces lower and pulls back up, we get our number 2. As the market stops printing these lower highs and pulls back, that gives us our number 3. 1, 2, and 3. 1, 2, 3 top pattern. We're looking to get short or sell on breaks or closes below the number 2. Okay. One of the great things about this particular setup is we don't really have to worry about the first 2 legs necessarily. It's not like we have to be glued to our screen watching this setup unless you're, scalping or day trading. But all we have to do to cash in on the 1, 2, 3 is spot when it's about to go past the number 2 point. That's that easy. Okay. So let's not waste any time. Let's actually put some application to this because, as they say, seeing is believing. And what I'm going to do is focus on the chart on the left. You guys and gals can read over this over here on the right. So what we find here or identify is a new number 1 point. In this example, we're looking at a daily chart of the Australian dollar. If you don't trade the Australian dollar, that's fine. You could look at the ETF FXA. Forex traders could look at Aussie USD. You're going to see the exact same pattern, okay? Now, what we're looking for is a 52-week high. This is a daily chart. Now, I want it to be very clear that we don't require a 52-week high or 52-week low. We're just going to focus on that for this example purposes. We'll talk about ways later where we can dial it back down to find more opportunities. So we have a new high. That gives us our number 1. Market pulls back, retraces higher. We give our number 2. Market pulls up by about 4 or 5 bars, pulls back down. That gives us our number 3. Now, the market could have gone as high, all the way up here. As long as we didn't take out the number 1, we would have had a valid number 3. So we have our 1, 2, 3 pattern. We know what? We know that we are looking to get short on breaks or closes below the number 2. You say, okay, I get this. I got it. Very easy. But what about the other important ingredients of the recipe? Like, hey, where do I put my stop or my risk? Where's my target? Very good questions. So our initial risk is going to be above the high of the number 1 right here. Our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. So you can see that right off the bat, this is a 1-to-1 risk reward. That's okay, but we can do better. It's very important to let the market materialize in your anticipated direction. So as we start trading lower and taking out these swing lows, we can then have permission to move our initial stop to where? Above the high of the number 3. So you can see that we've quickly cut our risk down by maybe 50, 60, 70%, okay? So let's look at another chart here. Daily chart of Walmart. We have a new number 1 high. Why? That's a 52-week high. Market trades lower, pulls back up, retraces, and comes down. We have a 1, 2, 3. We know what 98% of other traders out there are asking and questioning themselves. Where am I going to get in? Where's my risk? Where am I taking profits? We know that days in advance. We know that we're looking to get short on breaks or closes below the number 2. We know our initial risk is going above the number 1 high. And we know our initial target is the distance between the high of the 1 measured to the low of the 2 measured down, which is about $5 in this example where we meet target. Okay? Let's look at 1, 2, 3 bottom examples. Again, same setup, same rules, only to the flip side. So this is a 15-minute chart of the E-mini S&P. You say, hang on, Does it make sense to look for a 52-week high or 52-week low on an intraday chart, like a 1 minute or a 5 minute or a 15 minute? No. On an intraday chart, we're looking for what we call session highs and session lows. Okay. So if you don't already know, futures and Forex markets are trading virtually around the clock, 23.6. So wherever you start your trading day, whether it's 3 a.m. European session, maybe 9:30 Eastern New York cash open, maybe it's the last hour of the day, you're looking for new highs or new lows. Okay. So here the market is selling off. We make a new session low that gives us our number one. We pull up, come down, we have a 1, 2, 3. So we know that we're looking to get long on breaks or closes above the number two. We'll pause here and talk about a couple of different entry options. Okay. Aggressive traders can work a tick or two above the number two high. Boom, you get triggered into the trade. An alternative method that I prefer is either to wait for us to push up and come back and retest, or do what I call a second pass hook. Okay. So sometimes the market will bump up off the number two, zip up to profit, and leave you at the train station. That's okay. There's plenty of other opportunities. But what happens is sometimes the market will bump you into the trade up, and then it will come back, roll over, and you get stopped out. So waiting for what I call the second pass method can sometimes keep you out of false breakout moves. Okay. Let's look at another one here. This is a weekly chart of Apple. Hell of a way to catch some longer term position type moves. Here we have a multi-week low, 1, 2, 3, also double bottom. You see we break above the number two on this big bullish candle. Market goes sideways for a few weeks, comes back down, retests, and trades back up. That's our entry confirmation to get long. How? Well, we can buy Apple stock. We can buy call options, call debit spreads, sell bull puts, whatever your flavor or style may be. Now, failed trades. I hate to burst your bubble. They don't all work. There's nothing guaranteed in trading or in life. We'll have some bad trades. This is one I probably took in my live account. We had markets grinding up. We have a new session high that gives us our number one point. Okay. Market comes back down. We have a 1, 2, 3 pattern. The two different entry models. You take the initial break below the number two. You're triggered in the trade. If you exercise any type of money management, you're stopped out here above the number three, or you end up getting stopped out above the high of the number one. Or you wait for the market to come back down second pass. You're up a couple of points. You either get stopped out here or here. But guess what? We have a new setup. This high is greater than this high. We have a new 1, 2, 3 setup, and we actually have another trade, ends up being profitable. Okay. Now, let's talk about the no trigger trade. This is neither good, bad, nor ugly. I'm going to tell you in a second why I love this setup. So here we have a 1, 2, 3 bottom. We're looking to get long here. Market says, no, I'm going to go lower, and we take out the number one low. We get a new setup, 1, 2, 3. We're looking to go long here. Market says, no, I'm going to go lower. We take out that number one. We get another setup. Here we're finally able to get long in this third attempt. Now, does anybody want to take a guess or a gander on what is likely going on here and why I like this setup? What's going on here? We've got price making what? Lower low, lower low, lower low. If we added a oscillator, such as maybe stochastics, MACD, RSI, whatever it is you want to use, and it's doing this, what is this called? We have price making lower lows, lower lows, lower lows. Our oscillator is making higher lows. What's that called? That is called divergence. Okay, that is another high odds scenario to add to an already high probability setup. So the 1, 2, 3 pattern, trade management, again, confirmation of entries on a break above the 2 or B point for a long, or a close or break below the 2 or B point for a short. Exit strategies. Now, if you're only trading, say, one contract or one futures or one option or one share of stock or whatever it is that you're doing, I would say go for the distance between the number one and number two. So we know that this is a pattern, right? Our 1, 2, 3 right here, and we're looking to get long, and we know our target is here. it's uncanny how more often than not we'll hit target and then it often reverses. So I'd say, hey, go for that initial target. Now, when you are trading multiple contracts, I would say, hey, go take a third, a half, 2/3 off right here. Jack your stop up to break even, let the trade ride, and then you manage your trade however you manage. Okay, so that could be in the form of just a trend line, 2 to 3 bars back, moving averages, parsar. I mean, they come a dime a dozen. I like to use good old-fashioned levels, support, resistance, supply, demand. Where's there been history? I like to use as targets, and then I can move my stops accordingly. Okay, so I've showed you this setup works on any market, guys. Pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, or the Polish zloty. Showed you that it works in any time frame, whether you're a tick trader, you trade intraday on a 1, 5, 10, 15, hourly, daily, whatever, and on any trading style. Who here is a position trader? Who's a swing trader? Who's a scalper? Who's a day trader? Who's a tick trader? Because it works on any trading style. It truly does, because we're trading price action. And the reason I ask that is because you ultimately have to figure out what your bread and butter is. I'm not sitting here telling you guys this only works on a 5-minute chart of NASDAQ. This only works on a weekly chart of Alibaba. Not true. Works on any time frame. These are some of my favorite time frames. I also like executing off the 1 and 2 when I'm day trading. 1 and 2 minute. I love the hourly and 4-hour, and of course the daily. These are bread and butter, guys. Bread and butter. Put them on a chart. You'll see these over and over again. But you figure out what works best for your lifestyle. So you've seen the proof. You've seen the proof. Let's look at some more real trade examples. Not to say that what I've shared up to this point are fake examples. They're real by all means, but I want to show you some trades that we've used in some of our services. Okay, so let's break this down again. Guys, you could read, follow over here on the right-hand side. I'm going to work myself from left to right on the chart. So here we have a new 52-week high. Okay, that gives us our number one starting point. We have a small 1, 2, 3. It is small. It's small, but it's valid nonetheless. And we know again in advance where we're going to get in, where our risk is, and where our target is. Okay, we're going to risk above the number one high. We're going to target here the distance between the 1 and 2. We trade down. We meet our $3,000 per contract price objective. Then we go sideways. Get asked, Silas, is this working sideways or consolidated markets? The answer is yes. Okay. Yes, we have a 1, 2, 3 here, ends up trading higher, ends up being a good trade. I'm personally looking for new highs or new lows. Okay. I don't really trade the consolidating that much, but you can if you wish. We have a new number one high. Why? This high is greater than this high. We have a 1, 2, 3. Market has broken a trend line. And guess what? Guess why this was so juicy and why I was licking my chops. Not only do we have a high probability 1, 2, 3 pattern, we're also at a time of the year where crude and energy markets in general typically tend to trade to the downside. Okay, so we break below the number 2. We get 1, 2, 3, 4 days here of new opportunity to get in case you missed the first entry. We meet our $4,000 per contract price objective. Market comes down. We're trailing this market. We're trailing this market, guys, until we either get stopped out, or we get a reversal. Guys, this market moves another $20,000 a contract to the downside. We start to get a potential new setup here, potential new setup here, but we never break above the number 2. So we keep trailing. Market moves down another $10,000 per contract. Okay, finally get a new low here, 1, 2, 3 bottom. We break above. We come up when we get our $5 or $5,000 per contract price objective. Okay, you trade USO, minis, micros, whatever it is you wish. Now, say, well, what about some more recent examples? $5,900 move, $9,700 move, $4,500 move. The answer is yes, it still works in this live environment because we're trading price action. Let's look at gold. This is actually GLD, the ETF that tracks gold futures. I like to follow futures because we don't see all the gaps, but if you want to look at GLD, that's fine too. Okay. So here we have a 1, 2, 3. We know we're looking to get short here. Market comes down, reaches our $4 per contract price objective. Then what? Do we have to worry about what our overseas new gold and silver newsletter or precious metal hot penny stock alert newsletter says? No. Follow the market, guys. We have a new session low. 1, 2, 3. Market breaks above the number 2, reaches our $2 price objective. What about this stuff in the middle? What about this stuff in the middle? Well, you missed this, you missed that. Maybe you did, maybe you didn't. If you're trading this here, you got a 1, 2, 3 right here. Market moves up. Here's a 1, 2, 3 here. Great trades. Pat yourself on the back. I am only looking for new highs or new lows. Market's breaking down, breaking down. These all become new number 1 points because we're making new lows. Here's a potential 1, 2, 3 right here. But guess what? This little guy knocks out that low, so it gives us a new count. 1, 2, 3. We go boom, boom, gap higher 2 days in a row. Come back down and retest, hook back up. That's our confirmation. Buying gold, gold futures, buying call options, selling bull put spreads, whatever your style or flavor may be. Here we are recently, gold. Gold futures, a $19,000 move, followed by an $8,000 move, followed by a $24,000 move, guys. You can do this with minis, micros, options, gold stocks, Delta Airlines. I know this is becoming redundant by now. I'm just trying to hit home the fact that these happen over and over and over again. Here's our long trade, followed by a short trade. Gap lower beneath the gaps below the number 2. I don't personally trade those, but I've got students that will aggressively be buying put options there. We get another opportunity because this high is greater than that high. Sells off aggressively below the number 2, $8 to the downside, and then we flip. We get a new 1, 2, 3 bottom. Trades higher, comes back and retests. You load up on call options, sell bull put spreads, or buy Delta Airline stock. Recent examples here. You've got trades of $8.50, $13, $5.50, $8, and more. Forex traders, 4-hour chart of the CAD Swissy. We make a multi-session low, double bottom, 1, 2, 3. Aggressive traders are getting long on the initial breakout. The alternative method here, you break above, you come back down and retest, hook back above, you reach your 70 pip profit objective. Okay, that's good, that's great. What are you doing now? You're not doing anything, but you're waiting for a new potential reversal point. 1, 2, nope, 1, 2, 1, 2, 1, 2, 1, 2. We never get confirmations until we finally get this smaller 1, 2, 3 pattern up here. We break down, we come up, we hook back down, we reach our 40 pip profit objective. 4-hour chart of the CAD Swissy, 80 pips, 70 pips, 35 pips, 70 pips, 55, double nickel, and going. Any day traders in here? 5-minute chart of the NASI. Okay, new session low. That gives us a new number 1 point. 1, 2, 3. We break above. We come down. We hook back up. Reach our 13-point profit objective. While we're doing that, we have a new session high, which gives us a new number 1 point. 1, 2, 3. We break down below the number 2. We might have to pop some tums. This thing is going sideways on us. We finally break down. We reach our 20-point profit objective. While we're doing that, we get a new session low. 1, 2, 3. Market breaks above. If you're lucky enough to get long in that retest, you're filled on your 30-point profit objective in about 2 or 3 bars. 5-minute chart of the NASDAQ. You do the math, $20 a tick, 137 ticks, 60 ticks, 91 ticks on a 5-minute chart of the NASDAQ. So why are you here? Why are you here? You're here to learn a mechanical, done-for-you strategy for all markets in all time frames. This is the part of the session where I'm going to ask you, have I shown you enough proof? Have I done my job in teaching you a mechanical, done-for-you strategies for all markets in all time frames? It's either a yes or a no. If I haven't, then I've got to go back to the drawing board because I don't know if it gets any more easier, simpler, mechanical. There's really no guessing when to get in, no guessing where the market is likely headed, guessing where to get out. If we had 100 traders looking at the same chart, we should have 99 seeing the same thing, right? There's always going to be somebody that needs to create and make this rocket surgery. And we don't need to make this rocket surgery, okay? And I've shown you time and time again on why not. Now, let me ask you this. The one weakness drawback of these setups is that there are many. How do you catch them all without spending hours in front of your computer? Okay, well, but wait, there's more. What if I told you that this strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? Well, I don't know about you, but I would say that would be pretty freaking amazing. Well, do you remember the charts and the examples that we just went over? You guys remember those that we just went over? There's examples in crude, gold, delta, Swiss franc, all that. Well, here are those same examples, same case studies. But now you see all these colorful lines and arrows. Well, what do they mean? Well, I'm not sure. I know you're very smart individuals in here, but let's break it down. The green arrow is your number one. The red arrow is your number two. The blue arrow is your number three. How difficult is that? Now, what about the white chevrons? That's not a sell signal. This is not a buy signal. It's a signal waving at you saying, hey, we've broken below the number two or above the number two. We have a potential setup. And if and only if we break that number two, are you going to get these four beautiful lines? What are these four beautiful lines? This blue line is your entry or breakout level. Your red level is your risk. Your lime green line is TP1, and your dark green line is TP2. Now remember, TP1 is the distance between the high of the one measured to the low of the two measured down. And then TP2, or take profit 2, is 2 times the distance of TP1. You say, well, what about the heck are all these green arrows in the middle? These are new number one points because the market is making new lows. It's cluing us in. We might have a setup here. We might have a setup here. We end up breaking down before we get our last setup. Okay. Here's that example in gold. There's your long right here. There's your second long right here. We're not getting anything in the middle because we're waiting for new highs or new lows. Here's your example of delta. There's your long, your short, your short, your long, all plotted entry and risk there for you. There's the mini NASDAQ, 5-minute chart of the mini NASDAQ. Okay, we break down, we hit TP1, we hit TP2 to the tick, which happens to be a new session low. So we have a 1, 2, 3. We break above, we come down, we hook back up, we hit TP1. We don't quite hit TP2, but it's close enough for government work. We should have lost any money on the trade. We actually get a new low. This low, lower than this low, so hence a new number one. 1, 2, 3. Market just nips its little head there above the number two, which creates the pattern. We trade up, come down, we come up, we hit TP1. Notice as we're waiting to hit TP2, we're getting new session highs, which means a possible reversal signal. We do end up hitting TP2. Here's a new session high. There's your trade. We break down, we come up, come back down, we hit TP1, TP2, and we start to get a new potential long signal. Okay? So is this trading for you? Only you and you only can answer this. If you're new to the markets, you want to jumpstart your success. If you're an experienced trader who wants to add another arrow to your trading quiver, if you're tired of all the noise we talked about, the indicator overload, analysis paralysis, if you just want to simplify your process. Maybe you're already profitable, which is, hey, pat yourself on the back, but add a new strategy. I love new winning strategies. If you want a step-by-step plan and avoid doing this all on your own, this is something that you could do and do part-time if you wish. Just like these setups here. Holly Frontier. Is Holly Frontier on anybody's radar? I would bet you $1 that it's not. But if it pops up on my scanner, I'm looking at it and I'm going to trade it. Okay. All things else considered, it meets everything else, my risk profile. Google, short, long. Could you buy puts? Could you buy puts? Could you sell bear call spreads? Do you like to sell credit? You like to bring in premium, or do you like to buy options? 4-hour chart of the Canadian dollar. 233 tick chart of the E-mini S&P. This is a scalper's delight. Scalper's delight. I love the 233, the 610 tick charts for those that like the action. Why do all the work? Why do all the work when you can let technology do the work for you? This is a screenshot of my scanner in Thinkorswim, scanning for 1, 2, 3 tops across the Russell 1000. Only stocks that are optionable, $20 a share or greater. What would literally take me weeks, if maybe not a month, to scour through a bunch of tickers is done in seconds. I have a monitor that is dedicated to watch list scanning across tops, bottoms, currencies, Forex, stocks, across multiple time frames, at the same time. Now, we've looked at a lot of Thinkorswim charts. This is what it looks like in TradeStation, your indicator and your scanner component. NinjaTrader 8, your indicator and your scanner component. This is TradingView. Unfortunately, no scanner because there are limitations with the technology. I can guarantee you if the scanner becomes available, we'll get it done. But there's your indicator component. MetaTrader 4, 4-hour chart of the Euro Kiwi. Here we have a long, here we have a short, here we have a short, here we have a long. Wealth charts. Here we have what is this? An hourly chart of Lululemon. There's your entry signals. Even have it programmed for Metastock. Isn't this beautiful? This is so beautiful to me. Now, we know there's no real crystal ball in the market, but I like to view this as one that provides me with the process. I'm letting technology, i.e. my platform, scan the market for me, locating the setup. I go to my platform for entry and manage that trade through its exit. And you can start today as well, profiting from these predictable patterns with what we call the 3S code. Now, all this programming, coding, software, development costs well into the 5 figures. Guys, think about the 7 platforms, 7 different coding requirements, hundreds of hours of testing. But I realized that a $3,000 price tag is way out of reach for most folks. Even $2,000, hell, even $1,000. We're not going to charge any of that. I mean this when I say I want you to be able to start on the right foot right now with a proven mechanical, no BS, no guessing, straightforward setup that you can literally use and take for the rest of your trading career. And so we've made this absolutely and completely affordable today for those that are willing to take action and get in right now with today's special offer. We've opened up 25 slots where you're going to get the 3S code indicator for 7 platforms, the scanner for 6 platforms, the 3S code optimizer, access to our weekly strategy and scan sessions, access to private Telegram room access, quick start guides, guys, all for the one-time fee of $397, guys. Lifetime access. Go to tradestrending.net/code. I just put that into the chat window for you. Go to tradestrending.net/code. That gives you lifetime access for all of the platforms that we just introduced. Okay. Now, what I want to do is break this down, make sure you understand. You're going to get the indicator for Thinkorswim, TradeStation, Ninja, TradingView, MT4, Wealth Charts, and Metastock. TradingView does not have a scanner. It's not because we got lazy and didn't want to do it. TradingView is one of my primary platforms. It just the limitations don't exist. But if we're able to do it at some point in the future, which I would think that we would, it's going to be grandfathered in. You get access to all platforms, any or all that you may use. We've got a payment option that we've done a deal with PayPal through. If you want to finance through PayPal, you just want to pay through PayPal yourself, you'll find the blue PayPal button on the order form, tradestrending.net/code. It also give you access to our weekly strategy and scan sessions. Every week, we do a high-level top-down approach. We look at the markets. We break things down. We look at our day opportunities, our swing trading opportunities. We talk about using this with options, minis, micros. We look at stocks, futures, currencies. We'll look at tulips or tea leaves, whatever you want to do. The sessions are built for you on how we can trade these. Now, you're also going to get, remember, the indicator and scanner includes the visual plot of the 1, 2, 3 top and bottom reversal areas. That includes the entry, exit stop. A lot of it's customizable. If you don't like red, you want hot magenta. You don't want yellow. You want orange. You want an arrow instead of a dot. You have the ability to change that. You can customize the settings for multiple look back periods. You can scan for setups only or trigger only or both. What does that mean? A setup only means that you have this, a 1, 2, 3. Market is in setup mode. A trigger only is this, meaning we've already broken through the number 2. You want to scan for this, or both, you can. You want to scan for top reversals, bottom reversals, or both, you can. Intraday, swing, position trades across any instrument time frame, you have the ability to do any or all of the above. You're also going to get the 3S Code Optimizer. That's where you take the mechanical 1, 2, 3 top and bottom strategy, create and run multiple back tests across different inputs and settings. Backtesting can lead to more profits. The Optimizer is another tool that can help you progress in your trading. This is the 3S Optimizer here in crude oil. You can see all of the results here. I've got it running. There's our results. Here I'm running this across the British pound on TradingView. Here's the 3S Optimizer in TradeStation. You put in all of your settings. Here's all of your results and the 3S Optimizer for ninjas. So you can add and edit variables such as, EMA crosses, trend EMAs, all kinds of different settings there that fit your needs and your desires. Now, with this 3S Code package, I'm also throwing in additional bonuses. I'm throwing in my chart pattern principle trading manual and guide. This will help jumpstart you by teaching you how the markets work, why markets move the way they do, who the players are, how to look at and understand the market the proper way, bonus setups, how we use the power of seasonality, and much, much more. You're also going to get my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a powerful trading instrument if you know how to use them properly. So it's important for me to include this as well so everybody can take advantage of options if they wish to do so and do it the right way using 3S Code. You're also going to get access to our private Telegram channel. Again, I'm posting trade ideas in here each week across stocks, ETFs, indices, futures, commodities, currencies. We'll look at daily setups, weekly setups, and much, much more. Here are some recent posts from the room. This short here in Nucor that could be done with stocks or options. This one in Cardinal Health, again, that could be done with stocks or options. Here we are in the E-mini S&P. We had a long setup here, followed by another long setup here with target 1 and target 2. Okay, and again here in Moderna. Now, I don't ask for these. I don't ask for these, but these are success stories that come in from our students because simply they take action. If you don't take action, you're not going to see results. But these are students who have taken the 3S Code, they're taking action, and they're seeing success, and that is the only way, by taking action. And you can do so as well by grabbing access to our deal at tradestrending.net/code. So are you ready? I've got a few minutes to answer some questions here. Here is your complete offer again, tradestrending.net/code. Guys, if you want to ask, if you have other questions that you don't want to ask here, you can call us at 502-383-1182. You can email our team support at TradesTrading.com. We are real live breathing human beings. You're not going to talk to an AI robot. You're not going to talk to a recording. We have a team of human beings that you can talk to. You have direct access to me. We want to help you. We want to help you. We want you to be successful, and we can answer any question you have about the indicator or the markets or anything else in between. And I want to remind you, the weekly strategy sessions, these are very important. These are very important for you to attend, because this is where you get to review the markets with me in real time. You get to ask questions to me in real time. That is how you're going to learn. That's how you're going to learn. We apply this to real world application, and that's how you start to see all this come into place. So what I'm going to do here is answer as many questions as I can before I wrap up. I want to keep the timing research gang on time. Can you use it on fidelity? So the indicator is not built on fidelity, Pat, but what we have a lot of people do is they open or establish a free account on, whether it's Thinkorswim or TradingView or one of these others. And then they use that platform to scan and load the indicator on. And you can then execute on Fidelity or execute on Interactive Brokers or whoever it is you may use. Is there a free trial? No. Unfortunately, we don't give out free trials, because once you get access, we can't pull it back. Not that that's the way we want to operate, but we just can't. We've got people that will take advantage of us. Guys, a lifetime access fee. There's no hidden renewals. There's no hidden upcharges. It's a one-time fee, and you can get access to all platforms. So I've got a question about, can I load it on Ninja and TradeStation at the same time? The answer is yeah. You want to add it on all 7 platforms? By all means, go for it. If we add it to any other platforms in the future, those will be included as well. Dan asks, how much capital would you suggest we start with? How many trades might be a basic level to trade in a week? Those are very difficult questions to answer, Dan. So first one, how much capital would you suggest we start with? Depends on what you're trading, right? I mean, we've got folks, you can open an account with like 50 or $100, right? And trade micros where each tick is like 10 cents. Most folks, $2,000 to $3,000 on that minimum level to trade micros or minis. And I'm really talking about kind of futures. But even like if you trade equity options, I mean, hell, you can buy an option contract for $10. Is it going to be high probability? No. So the really got to figure out what you're trading. Like if you trade stocks, options, futures, currencies, the barrier to enter each of those vary a little bit differently. But if you want to email us or call us, we'll be happy to answer that for you. How many trades might be a basic level of trade in a week? Again, depends on what time frame you're looking at. If you're looking at a tick chart, you're going to get a hell of a lot more trades than somebody that's waiting for a setup on a daily chart. You look at a daily chart, you might have 1 or 2 trades a month. If you're looking at an hourly chart, you might have 10 trades, 5 trades. It depends on the volatility in the market movement. How much of trading are doldrums? Again, you got to ask the market. If we're in a consolidated market, you're still going to have setups as long as we're making new highs or new lows, as long as we're seeing an ebb and a flow, right? If we got volatility, we're in an expansion volatility type of environment, whether it's the S&P, whether it's gold, whether it's Caterpillar earnings, you're going to see different market environments. And that's why it's so great, because if the market is simply just flat, you're not going to get any signals, and you're going to avoid a lot of the whipsaw. I'm not going to say you avoid every loss, but you avoid some of the whipsaw, right? As markets are ebbing and flowing, which we know they always are, you're going to have plenty of setups. Stevie, can it work with Forex trading? Yes, I showed you multiple examples there in Forex. We're trading price, guys. If you want to, anything that you can put on a chart, if you trade butter futures, then yes, it works on butter futures. Currencies, stocks, futures, commodities, cryptocurrencies. When the system detected entry, is sent out notifications automatically. So it depends on your platform. I don't know. I can't see your name, but depends on your platform. You will get alerted to those setups if you set it up properly. Like you'll get a ding or a bell or maybe an email when you have a alert, like maybe a new bottom setup, new top setup, and so forth. Thank you, Andy. We got a couple students in here that Andy's crushing it on the prop side using this and our methodology. So yeah, we've comes with full support, guys. If you need any assistance, if you need help installing it, our team can actually do a remote session with you, log into your computer, get you set up. All part of that, we provide continual support. So I want to say thanks, everybody. Thanks to those who have joined. We do have limited spots because we want to make sure everybody's taken care of. Thank you, David. Thank you, Anka. I really appreciate it. Great crowd. And I look forward to seeing everybody inside the markets. Take care and talk soon. Have a good one.